I think gold makes new highs this year. I would say 2,200 maybe. They're 10% from here possibly. Again, I think gold looks really good, and I think silver looks really good. I think silver will move more than gold. I think silver will get into the 30s, probably a 30% move from here maybe. Again, I don't know if it'll get there by the end of the year. That's what I'd be looking for. That's what my projection would be. And I am long both gold and silver here, and will continue to be so. And again, gold and silver is something, even if I'm short on the board as a trader, I'm always long in physical, but actually now I'm long both physical and on the board because they look pretty good. And we'll see. I would suspect new highs are coming.
Gold and silver prices dropped significantly today, hitting their lowest levels of the day during midday trading in the U.S. There is not much new news affecting these precious metals, and traders are paying attention to other important markets that are currently not favorable for gold and silver. As of now, the price of December gold has fallen by $28 to $1,981.10, and the price of September silver has decreased by 64 cents to $24.32. According to Todd Horwitz, the price of gold could reach new highs this year, possibly around $2,200. He also thinks that silver will perform well and could go up by around $30 from its current price. Horwitz believes that this is because inflation is slowing and interest rates are expected to rise. He thinks that gold is seen as a safe haven asset during times of economic uncertainty, and that silver will also benefit from this. Inflation is falling, with the headline Consumer Price Index measure slowing to 3% in June from 4% in May, according to all 106 economists polled by Reuters, with a majority still saying that will be the last increase of the current tightening cycle. Horwitz believes that interest rates will go up and Fed will keep increasing. Even though Fed might say they'll slow down, I don't think that will happen. Let's watch snippets from Todd Horwitz's interview, but before getting into the video, make sure to subscribe our channel and give this video a thumbs up.
Well, I think interest rates are going higher, and I don't think there's any doubt in my mind that they're going to continue to hike rates. They may say they're going to slow. I don't believe it. Listen, the 10-year notes, in my opinion, are getting to 6%. Okay, so how many more rate hikes do we need from the Fed to get there? Not very many. I don't. They're still, even at their phony 3% GDP number, they're still, or CPI, excuse me, they're still a full point away, which means they still have to raise rates to get to their 2%, which is totally ridiculous. We're nowhere near 3% in CPI. I would bet you that if they did real numbers, we'd be at 14 or 15 or 16%. Inflation is ridiculously high. And until we can get crude oil under control, and like here, we should be reproducing our own. We should be a net exporter, not a net importer here. And those are the big issues because, of course, fossil fuels, crude oil, is 80% of our economy, from the actual usage in your car to the delivery of the goods and services that you need. So I don't see anything that is very good. And the Fed is, I think, going to continue to hike rates. Listen, they are a ridiculous organization that really should be ended, or at least have a true audit, which we have never had. And of course, that's just a joke. It's not getting better. Inflation is not lowering. It is just an artificial number, and it's more of the formula and the way they report. We're using antiquated information that really does not give a true picture, because I can tell you for 100% certainty that I go grocery shopping myself, and when I buy the exact same items every time I go. My grocery bill is 60% higher than it was last year at this same time. It's a hard asset commodity that is a play on currency. If you see what's going on with the currency, with the digital currencies throughout the globe now, I think that's a problem. I think that's going to hurt people. I think people are preparing for that. I think they're preparing for some, you've got some states, for example, in the United States, Texas and Missouri are trying to get the gold standard back in their states, using them as currency once again. You've got what's going on with BRICS right now. I know many of them don't want to get there, but at the end of the day, when they start talking about using a gold-backed, security as a currency again, those are things that can drive these prices a lot higher. Plus the fact that a lot of people look at them as safety plays and plays against inflation.
About a year ago, something important happened with government bonds, called treasuries. The way they work, called the yield curve, showed something unusual, and it's happened 6 times before since 1978. Every time this happened before, it was followed by a recession. Horwitz believes we're currently facing a recession. If you look at how interest rates are behaving, something called the yield curves, you'll notice that they are very unusual right now, the most unusual they've been in 40 years. In a press conference after the interest rate decision, Fed Chair Jerome Powell noted that inflationary pressures had eased, but there was still a long way to go before the Fed's 2% inflation target was reached. Powell also said that future monetary policy moves would depend on upcoming data, and decisions would be made on a meeting-by-meeting basis. President Biden has said that the economy is doing well, but Todd disagrees. He points to the fact that many people cannot afford a $400 emergency expense and that the cost of living is rising faster than wages. He believes that these are signs that the economy is not doing as well as it seems. Let's watch Todd Horwitz's interview with SOAR Financially.
Wherever you look, I don't think there's anything really good going on. I think this is a perfect example of people putting their head in the sand and forgetting everything that's going on around them. We continue to see debt increase. Look at the individual credit cards. I mean, we're not going to get into the dollar amount of credit card because, again, that's ridiculous. It's, the inflation numbers change how many dollars, but how many people are at limit on their credit card is the key, paying usury rate interest rates to service that debt, which is just laughable when you look at it, or maybe it's cryable. But the end of the picture is that the economy, in my opinion, is horrible. The United States is in a recession, even though they keep telling us how good they're doing. And I see President Biden out there bragging about the economy. Well, when the average American doesn't have $400 for an emergency, and when people aren't working, even though they tell us they are, to me, there's a lot of problems with this economy. Well, if you consider the yield curves, it's most inverted it's been in 40 years. Okay, when you consider everything else going on, and again, this is just the same old story of every major government around the globe: kick the can down the road, build more debt, let the next generation worry about the debt that we're building today, and let's spend this money on stupid projects and steal it from the citizens that put it in there. And that's, of course, the whole problem in the political system. Okay, is it allows lifetime politicians to make a fortune while torturing the middle class because they can create new debt anytime they want, which makes the economy nothing more than a gigantic Ponzi scheme. I think we're in a recession now. So I mean, again, you can tell me, when you use American trained economists that have no common sense and no clue of what's going on around them and don't understand the middle class and below, you can say no recession. Ask any person. That my words to everybody are always the same. Go look at your own spending, look at your own bank balance, look at how you're living. Are you in a recession or are you happy? And I have yet to find anybody in the middle class or below that is happy and is in real good shape right now.
Inflation is slowing, but interest rates are still rising. This is a mixed bag for investors, as gold is seen as a safe haven asset during times of economic uncertainty. What do you think? Do you agree with Horwitz's predictions? That's all from us. If you like this video, please like, share, and subscribe to our channel and click the bell icon to be notified when we release new videos. Currently, 96% of you have not subscribed to our channel. Our goal is to reach 1,000 subscribers as soon as possible, and we cannot achieve this without your support. Please consider subscribing to our channel and helping us reach our target. Your support means a lot to us.